How changes to buy-to-let underwriting standards will affect landlords. Part 1. Affordability testing. In March 2016, the Prudential Regulation Authority issued a consultation paper which proposed that lenders should apply a stricter set of rules when underwriting buy-to-let mortgage contracts. In particular, the PRA was keen to ensure that affordability testing will be sufficient to accommodate the tougher tax regime that landlords are now facing. The consultation closed in June, and at the end of September, the PRA published a statutory statement which confirmed how lenders should proceed. By the 1st of January 2017, interest cover ratios must be increased for landlords borrowing personally. An interest cover ratio is the amount by which the rent must cover the mortgage interest payment. For many years, the industry standard has been 125%, regardless of whether the landlord was borrowing in his own name or using a limited company. From next year, for personal borrowers, the standard interest cover ratio is likely to be 145% if you're looking to get new buy-to-let finance. However, if you're planning to remortgage on a like-for-like basis, don't worry, the new standard won't apply. The PRA doesn't want to create any mortgage prisoners. Also, the new rules won't apply to landlords borrowing via a limited company because they won't be affected by the changes to income tax. When working out the maximum amount a landlord can borrow, lenders take the interest cover ratio and multiply it by a stress test calculation. Traditionally, stress tests have been the interest rate or a notional rate of 5%. But from the 1st of January, this too will be increased. Stress tests are moving up to a minimum of 5.5% for the first 5 years of the loan. If you are a landlord looking to borrow personally, this could have a huge impact on how much you will be able to borrow going forward. Essentially, it means you will be able to borrow less. Here's an example. This year, say your total rental income on one of your properties is £24,000. Currently, a lender might calculate how much you can borrow by dividing the rent by a stress test of 5%. Then dividing again by an interest cover ratio of 125%. The result is you could borrow up to £384,000. But look how the amount you can borrow reduces from 2017. The rent is the same, but the stress test will be 5.5% and the interest cover ratio will be 145%. The result is that you will be able to borrow £83,060 less than you can right now. You may be surprised to learn that some lenders are not waiting for the 1st of January and have already upped their rent-to-interest calculations. So, if you're looking for buy-to-let finance in your personal name and want to take advantage of lower affordability tests, it's very important to get in touch with us now to discuss which of the remaining options might work for you. Remember, January will be too late. Call us today on 0345 345 6788 or email us at enquiry@mortgagesforbusiness.co.uk. Our expert buy-to-let advisors are ready and waiting to help you. Thank you for your time.